Brian Hoops is the president of Midwest Market Solutions, and he joins us right now. And Brian, always good to visit with you. We have seen a steep nosedive here in this grain trade over the last half hour of trade. I want to get everybody updated on our current trades here. We'll start with this corn market and our quotes provided by Bar Chart. What happened here? Let's take a closer look at this. We have the nearby corn all of a sudden 35 lower and now 33 3/4 lower at 623 1/2. They're really getting people used to these new wider margins, aren't they? Wider trading limits. Goodness sakes. July down at 623 1/2. We have December now dropping 21 1/4 cents at 518. Now down 22 1/4. Wow. Okay, led by the nearbys on the way down. Early on, we had soybeans trading with double-digit gains, and now you have July soybeans 21 cents lower at 1501 3/4. Somewhere the wheels fell off here. The November contract is down 21 1/4 now at 1341, within a penny of its low of the day. In the wheat market, let's see if it can break away from the corn and soybeans. No, it can't. We have July Chicago wheat down 12 1/2 at 649 3/4, and that's within a penny and a half of its low of the day. On these quotes provided by Bar Chart, we have July Kansas City wheat dropping 15 cents now at $6.25. Uh-oh, look at that low of the day, 598 1/4. We are off of that a couple of pennies now, but now it's at 5.99, so we're under $6 in that Kansas City wheat all of a sudden. And Minneapolis spring wheat has July down a penny and 3/4 at 683. Brian, I know you have your ear close to the wire all the time during the trading session. What happened here about half an hour to 45 minutes ago that caused this entire grain complex to fall out of bed?
You know, that's a good question. I think people are going to be trying to find an answer for that to justify this big break in prices, whether it's some fund that's getting just blown out of their positions, stops being ran, or what it is. We haven't heard quite yet. But usually when you see a big drop like this, it's because there's a fund or someone that has been long that decided to get out of positions or maybe was forced out of getting out of these positions. And they just really have hammered these grain markets. So we went from, as you said, soybeans trading or trying to trade higher in the session, now turning lower. You know, you look at the overall weather pattern for the U.S., it's really not threatening for the corn soybean crops. You know, there's maybe a threat to the spring wheat crop, which is, dry areas and maybe, extended forecast suggests dry for Canada and North Dakota. But boy, there's certainly plenty of rain showers moving through most of the Midwest that I think is really turning speculators away from this market and leaving end users as the only ones sitting there to buy. And they're going to buy as the market comes to them on the downside.
I just wondered if there were any clues on the dollar value right now. And right now, the dollar value is actually lower. It's 118 points on the downside on the June contract. So that puts us at 89.725. And if anything, that should be helpful to the grain markets to help support them, and that's not the case either. Crazy dynamics in this grain complex here so far on a Tuesday. We'll come back in just a moment, and Brian will see what's going on in the livestock trade. Is it as volatile as the grains? We'll find out in a moment. Well, somebody pulled the rug out from under the grain market. Can the livestock market hang on to the gains it had? Let's take a look. On the live cattle first. We have the nearby contracts sagging below unchanged now. So it's very, very quiet. This is almost eerie. We have the June contract now down 12 cents at 116.62 after a high this morning of 117.75. So we're off that about $1 and a dime now. We had some pretty stout gains in the early going, and that's all gone. August live cattle are now down a dime at 120 even. That's about $1.20 or 25 off of its earlier high today. The October, though, is 12 cents higher at 124.40. Still 95 cents off of its high. On the feeder cattle market, here we go. We have the August contract up $1.52 at 155.65. So strong gains there, but I will caution you, it is off of its earlier high by about 65 cents. And looking at the September, we're up $1.55 right now. Over to the lean hogs. So let's take a look here. We have June 52 cents higher at 113.87. Before you get too excited, that's 90 cents off of its earlier high this morning. And July lean hogs 95 cents higher at 116.27. The biggest gain in lean hogs is all the way out to August. It's up $1.12. All right, Brian, it seems to be that the livestock trade is cooling its jets as well as we get into the mid-session. What is at work here pulling on the livestock trade?
Yeah, you would certainly expect feeder cattle to have a big move here with the sharply lower corn values. Feeder cattle should be the beneficiary of that and see higher prices. I think the live cattle rallied out of the gate, kind of overcame and digested all the cattle on Feed Report News. And then, but the cold storage numbers that came out, a little bit supportive, showing a drawdown in beef stocks. We rallied off of that news, trying to push this market higher. Hogs the same way. 26% drawdown from last year in cold storage numbers for pork stocks. That was seen as bullish, and so there's strong demand for our beef and for our pork. I think these markets should try and move higher, steadily higher into the summer. Cattle market's still going to be faced with bigger supplies, though, and that's something they're going to have to overcome. But with more restaurants opening up and grilling season for the majority of the country really taking off here as we go past Memorial Day into the summer timeframe, we should see that demand be very much a supportive feature for both beef and for pork.
Brian, I'll ask you the same question that I posed last half hour. With this sudden drop in the corn market, if you're a livestock producer, would you be locking something in today?
Yeah, I think you have to be doing something on this break here in prices. Next week is June already, and that's when you can see your really large gains or losses in value. So, you get into a hot and dry stretch of June. We've been pretty cool, pretty wet this spring. The weather usually cycles from cool and wet to hot and dry. If we get hot and dry in June, prices really could escalate and take off. So this is a perfect break if you're an end user of any type, hog feeder, cattle feeder, any type end user. This is a break that you're looking for to be accumulating and buying some inventory.
Just wanted to point out the crude oil market about flat. We're down 4 cents on July futures for West Texas crude. It's at $66.01 per barrel. Brian, great information. Thank you so much for coming on board. I know it's a wild market right now. I appreciate the help. Brian Hoops of Midwest Market Solutions. Janet, back to you.